Hello, this is the chart profit video, approaching 3 hours into the trading day on Friday 17th of August. Okay, first off I just want to review weekly charts. We're looking at a weekly chart here of the spider from the start of 2016. Trend over the last few months clearly up. Small caps Russell 2000 ETF IWM. Trend over the last few months clearly up. German DAX, we could say ranging over the last few months. UK FTSE 100 large cap index, trend over the last few months broadly higher but ranging over the last 2 or 3 months, and actually printing close to the bottom of that range right now. This is the Nikkei from the start of the year. It's kind of lower. We have seen this index higher since the start of March. Again, last 2 or 3 months pretty flat, ranging. While we're looking at this chart, and this is a level that we've looked at before, this big dashed blue line here is the halfway point, which goes back over decades from the high, I believe, 1990 down to the subsequent low. A very important level, especially if you're a fan of WD Gann. The point is, we can see clearly on this chart that resistance level, again called natural resistance, has really come into play here, and this in the longer term is a pretty weak price location for Japan. Finally, we look at China, Shanghai, very different picture, a bear market. Here's the high earlier in the year, and we're well down this line here representing the 20% level off that high, and we're well below it currently. Just contrast that back to the first chart I showed, which was the spider from 2016, and I think the point is these indices, these regions, are in no way correlated right now. So clearly the US continues to be the strongest performing region. Over the last 18 months to 2 years, I've seen many major investors and commentators telling us that the US is overvalued, we should be underweight US. Europe is undervalued, we should be overweight Europe. That hasn't worked out very well, and as I say, the US bull market continues, whereas elsewhere global bull markets have either stalled or broken down. Just relating that back to very short-term time frame, we're looking here at the profiles for the E-mini S&P over the last few days, and our first level support on this chart, as we've been saying, is 28.15, which is the minor 35-day controlling price, and so far we've had a very brief test, a rejected test of that first level support, and the E-mini bounced back pretty swiftly, and the longer term trend does not come under threat until we see time printed below 27.72. Just in this little dip here in the spider, we saw the breadth get a little mixed here, deteriorate a little from the green positive breadth indications that we saw through July, and we saw momentum giving us a negative divergence here with price, which was going higher. As we know, when the price momentum starts to dip, it often gets back to zero, the zero line, and that could happen in this case, obviously, while the spider may be churning a little, or even moving slightly higher, or even of course falling. But although price bounced back yesterday, it'd be nice to see the breadth and the price momentum giving a little more of a short-term positive confirmation. It's my intention now just to run through some of these major charts. Our daily time frame, we're looking at the spider here. The 18-month major support remains down here at 271.70. A minor 2-month emerged here at 280.90. Just like the E-mini, just briefly testing below its support. Its minor support at 28.15, the spider did exactly the same thing here and bounced back. So this chart's still in a really strong position. This level here on the Russell 2000 ETF IWM, 167.60, will be a useful reference level. That 8-month has just emerged at that point, while the chart has been consolidating through this sort of it looks a bit like a continuation triangle. We'll see which way it breaks out, but price relative to 167.60, which has just emerged, will be important, so we'll watch this level next week and going forward. Slight migration of the 1-year controlling price on the FTSE 100 index to 76.48. which is here. We're finishing the week below that level. That's weak price location. Really want to see the FTSE printing time back above that point. Major level on the German DAX has not changed. It remains at 12,450 here. This week has been printed below that level. Again, this is weak price location, with the high of the week here on Tuesday at that point. Really want to see the DAX printing time back above that level. And interestingly, that point, that level, is more or less the halfway point of this low to this high. Doubly important level, currently a weak looking chart. These levels here on TLT, the T-bond ETF, have remained pretty constant over the last few months. The major at 121. We're attempting to print above that at the end of this week. We've seen previously, late last month, support here at 118.50. Price printing time above this level would put T-bonds in a strong position. I'd say that remains at resistance for now. This is GLD, the gold ETF. Let's just review this. We had a 4-month controlling price emerge up here at 125.23. We had a lower high here which found resistance from there. We gapped down. This is a weaker looking chart, but we had the major support, the major controlling price at 121. We fell below that and printed time, and then the waterfall continued down to the major value area low, that being the same value area low associated to this controlling price. In a developing distribution, I expect support or even a very quick rejection of a test of a value area low, and this did not happen, and this suggests that we are in a new distribution. Now, there are all sorts of reasons that you will hear and read about in terms of commitments of traders data, sentiment data, and some very intelligent commentary telling you that gold is massively oversold here and is really due for a bounce. But even after this extremely sharp decline over the last few months, I'm still really not sure about that scenario, largely based on what I spoke about earlier. If we were in the same major distribution centered around this 121 level and this value area low, you would expect a really quick rejection. So I think we're in something new here, and I wouldn't be happy unless if this controlling price stays where it is, 121, I want to see price back above that, or this moves lower, and that seems unlikely at the moment. So again, GLD gold is oversold. It may bounce back a little, and here we're looking at the dollar index. Pretty much over the last few months, the inverse of that chart. The dollar index, you could say, technically overbought, but let's just review again. 89.54 down here was long-term major controlling price. We found low here and rallied back. We then found resistance at 94.80, and across this period here, clearly 94.80 emerged as the major controlling price. It shifted up, which is often a bullish indication, particularly if we subsequently print above that level and rally, which we've done. So there's room for the dollar index to dip back here, but as long as it holds above 94.80, it's in a really strong price location. And my thought process at the moment, until proven incorrect, is that the dollar is in an uptrend that will continue, and gold is in a really weak position. In July, the Euro FX chart here, we spoke about this, found resistance at the 1 year, could not print above it, indicating weakness, and obviously in August we've seen pretty swift decline, general weakness in the euro, general strength in the dollar, and so we see that sharp decline below the May-June low. And clearly the same thing with the pound. 132 dead is the major. I've written here previously, now the major came in here somewhere. We then saw a bounce back and found resistance at that point, and then again a sharp further leg lower. Okay, that concludes this video, and once again I thank you for watching.